All right, so this is what we nicely call everything you always wanted about flood insurance, but we're afraid to ask. Again, I'm joined by Edna. So if you remember just one person here, it's Edna's more important because she's the one that has all the links to the resources and can answer your questions whenever needed. And she's just absolutely terrific. Today is the first of 4 trainings that have been scheduled. They're always at noon Mountain Time. And then the content that we're sharing today is repeated. So what you're going to see today will be the same content for next Wednesday, next Friday, and the following Wednesday.
Okay.
So our goals today are really around helping you. And this is around making sure that you have the most information and knowledge so that you have confidence and give you the most profitable realtor in your market. On top of that, you know, we like to say that insurance is very complex, especially flood insurance. We like to simplify it for you. And what's making it more complex is FEMA has just instituted some new changes, very important, and it's really affecting everybody across the entire country. So we're going to spend a considerable amount of time making sure you're clear on all that's happened and what that means for you as a realtor. And then this is completely interactive, so please use the chat function to let us know any questions you have. You're our client, right? So we've worked out this arrangement with Intermountain. We've integrated within every listing, but really this is around you and making you the star. And we view it in a multitude of ways. And most importantly, you know, we see ourselves supporting you in your sales process and the assessment. And it can work on both the buy side or the sell side. We like to surround it with the training and education, and we want to make sure that you have all the confidence to present information to your client and represent the work that you're doing. We see value up front. We see value as you work through the process. We think that there's incredible value to you as you're looking at the total cost of the investment with our platform. And then maybe most importantly, once the contract's in hand and you're working through contract to close, that's where we can really be of great value. And our partner at We Insure, who's our strategic insurance agency supporting you in the market, that's where we can really make sure that you and your clients have everything you need and you remain at the center of the transaction. So we like to look at this in chapters. And so we've got really 3 main chapters today. First is broadly around the flood and what's going on in climate change. And I'll do a demo of the platform so you can see how it works. Then we'll dive right into kind of the flood insurance 101, where it's detailed at the right level around kind of base terms, options that you have, coverages and claims. And then we'll talk a little bit about the resources available to you, and then we'll open it up for any questions that you have. So let's start with chapter 1. Let's talk about flood. So across the country, there's over 41 million properties at risk for flood today. And the map that you see there is color coded, and the darker that it is hidden flood risk across the country. And when we look specifically at your market, you can see there's a lot of color differentiation between FEMA and the way the government has historically looked at it, and new independent research that's been done that takes FEMA's work and extends it looking forward to what the probability is going to be for risk for flooding going forward. And as you can see right here in Ada County, FEMA's assessing that about 6,600 properties are at risk. This independent research sees it as 3 times as higher. And so, part of this education is really just understanding, how there's differentiation just looking at the same data, right? So FEMA historically has been doing flood maps and flood zones. They will continue to do that. But as we know, climate change is happening with such velocity that looking at data and modeling that data for 5 years or 10 years or longer is just as important as the historical maps that have been generated. So a lot of this research, a lot of this new data is presenting scenarios of what could be. And we know, most mortgages are 15 or 30 years. There's a high probability that there's going to be some risk of some sort of climate event, flooding or other, fires, what have you, in that period of time. And our job as CartoFront is to present the facts and lead you to making the right decisions for you and your clients. Looking at the weather map for this winter, they're projecting what's called a La Nina, right? And the way they've identified it is the colors that are in green are trending towards greater precipitation throughout the winter. So the Pacific Northwest, mostly the state of Washington, the northern part of your state of Idaho into Montana are very saturated at the moment. It starts to get a little bit lighter towards the middle part of Idaho and lower. So you're kind of in the hot zone, so to speak, or the wet zone for La Nina for this year. Again, these are projections, and they're tend to be somewhat accurate from a high level, but we'll see how things are going. And it's literally day by day, week by week. Let's talk a little bit about FEMA and risk rating 2.0. This has been something that may have come across your email in the last 3 months. It went into effect on October 1st. FEMA has changed the way that they do their pricing for the government flood insurance. It's the most substantial change they've ever made, and the program's been in existence for over 50 years. Essentially, with what they call risk rating 2.0, they're moving from just using charts that say, if you're on this flood zone, this is what the price is, to basically risking each and every property by using data and a new model. So what does that mean in reality, or what could it mean for your clients? The headline is, and we'll get into this in the next chapter as well, so I just want to give you the headlines here. The headline is about 1 out of every 4 properties across the country, so 1 out of every 4, right, will see a reduction in cost. In this market in Idaho, it's about 3 out of every 10, so it's about 30%. The remaining properties, somewhere between 70 and 75%, are going to see an increase in FEMA rates. Okay, so in this market here, there's about 5,600 policies in force across the state of Idaho. So about 70% of them are going to see an increase in pricing, is what the government is projecting here. Most of those increases are going to see between $0 and $10 per month. So somewhat affordable. There are going to be about 10% of all policies that are going to be 10 to 20 bucks per month and are going to see high numbers, right? So we'll talk a little bit more about this, and we'll talk a little bit more about how you can protect yourself and your clients with this change. Let me now move into doing a demo. And while I'm transitioning out of this screen to other screens, please use in the chat, just let us know if you've already tried our application on the IMLS system. So feel free to do that right now. Okay. Can everybody now see this home on Paragon? Okay.
Yes.
Great. All right. So I'm going to take a quote now. We are located under the action plug. We're right here, CartoFront right here. And now by clicking on this, what I'm doing is I'm requesting a free quote from our service. So I'm going to click on that. And behind the scenes, we're taking the data. I may have timed out. I signed in. Okay, it's loading. Okay. So The data is being transferred. You can see by these green marks here on the right-hand side, the market's being transferred. And then we are going out for quotes from the government, FEMA, and National General, who's a private flood insurance company. And so now everything's loaded for you in the application. So let me just kind of give a little quick view of what we are seeing. So first thing that you'll see is the property that we requested right here. The picture of the property, that the lead picture is right here, so you can see, which is good, so you can identify, yes, that's the right property that I've asked for. The listing price is here on the banner, the address, and then right off the bat, you see what flood zones determined. So there's 3 main flood zones in the IMLS market. So flood zone X is going to be the most common. Flood zone X is what's called low to medium risk, right? So probably 2/3 of the United States is in a flood zone X, which means it's low to medium. Now, that's good and bad to know, right? The good thing to know is that it's low to medium risk. The thing that needs to be researched is the fact that while it could be in a flood zone X, it could have high risk for flood, right? So when Hurricane Harvey came through Texas a couple of years ago, 70% of all the residents in Houston were on a flood zone X, but still had tremendous flooding. So that's an important thing to know. We'll talk a little bit more about that when we get into the flood insurance information 101. The other flood zones start with either the letter A as in apple or V as in Victor. Those are actual flood zones determined by FEMA. In your market specifically, especially in kind of the areas around the river system, in Boise River, et cetera, you're going to see probably somewhere about 10 to 15% are going to be in flood zones, either A or V. If you're going to fund, if your clients are going to take out a mortgage, they absolutely have to have flood insurance. It's mandatory based on mortgage law. Okay, so talk a little bit about this further on, but I just want to mention it right now. So now, what do the rates look like? So the first rate you're going to see is FEMA. We've locked in the government first because it's the program that most people know about. The government's program is standard. It's $250,000 for the building and $100,000 for the property. This is across the entire country. It's $250, $100, and their deductible is $1,250 per each of these. So it's $2,500, okay? The government price for this insurance is $38 a month or $461, okay? Right underneath that, you have 2 quotes from Beyond Floods, who's the private insurance company. The first is what we call standard, right? Because it's identical to what the government's offering. It's $250, $100, right? And the deductible for them is slightly higher. It's $3,000. You can see it's $33 a month, or about a little bit more than $400 a year. Now, why do you have an enhanced? You have an enhanced version, right? Also by the private side, because the value of the property, $340,000, requires a little bit more insurance than the $250 that is standard, right? The way the government looks, the way insurance looks at it is about 80% of value of the house is replacement cost, and so that's $272,000. And so the quote for $272,000 of insurance is $40 a month or $486. So that's how you read all of that. If in any quote that you have any questions, you click one of these blue bars and you have quick contact to the local insurance agent, Erica Ostrander. You put in your information and a way to have her contact you. You hit send, it goes right to Erica, and then you can get an email or a call back very quickly from there. Sharing this with your client is equally as easy, okay? And there's a couple ways to do it. You can download a PDF. So say you're taking them on a tour, you can download a PDF and include that as you tour the property. You could click a link and drop it into an email or into a text, and they would get a link directly back into this quote. Or you could just send an email to them. And it's as simple as putting in an email address for your client. I'll do it for myself and hit the send button. And then on the back end, just so you see, I'll hit refresh here. And here's how the quote would come up for your clients on the back end. Hello, this is a standard greeting, powered by CartoFront. Now introducing you to We Insure and introducing your client to that. And then your client has all the information that you just saw at their fingertips, and they can very easily click on this button and come right back into the quote. Very easy system, very intuitive, and we're always looking for ways to better help you. So please, feel free to let us know how we can help you beyond this. Okay, all right, demo's completed. Let's move to the next thing here. Okay, so flood insurance terms. Let's talk a little bit about this now. Let's start with the basics. What is considered a flood? So there's actually a definition for that. A flood is defined as an excess of water on land that is normally dry, affecting, and this is the important thing, 2 or more acres of land or 2 or more properties, right? So if your sprinkler breaks in your backyard and you flood your backyard, that's not a flood. That's your own issue. If the snow melts very rapidly in March, off the mountains, and it overflows the rivers, and now you've got torrential downpour on a Saturday afternoon, and you get 4 inches of rain on top of all that slush. Now you got floods, right? And floods can be caused by storms or hurricanes in some parts of the country, snow I just mentioned, or a water backup from inadequate drainage systems or dams or levees. And these are government things. So think about all the building that's going on in Boise, right? Because you got no inventory and the properties are all by themselves. Well, 5 years from now, there might be torrential rains, and the sewer systems that once used to take care of 10 properties is now trying to take care of 20 properties. That water has to go somewhere. That's flooding, okay? Right. Important also, what is not a flood? A flood is also not considered to be covered if it's like an internal thing. So again, back to a pipe breaks within a house. That is covered on your homeowners. That is not covered with your flood insurance, okay? Water's got to come from outside in to be a flood. Okay. What's flood insurance, right? So again, we're being very specific here because this flood insurance is one of the most confusing insurance products out there, and a lot of people mistakenly think one thing, and we're trying to clarify that for everybody involved here. So flood insurance protects your property in the event of a flood or flood-related disaster. Okay, duh, right? But flood insurance, it's its own insurance, right? It's not included in homeowners. It's a separate insurance policy that must be purchased separately through a qualified insurance agent. Why is it separate than homeowners? Because it's its own peril, right? So in certain parts of the country, let's think about massive floods in Boise or in Sioux City, Iowa, or a hurricane hits Florida. These things have to be insured separate of the homeowners, right? That's why it's its own product. It's its own risk category. That's why it's all done this way. One of the most confused things are most homeowners think flood is covered within homeowners. It is not. Okay, we covered on this before. I just want to re-hit it again. Flood zone 101, right? So an X zone is low to medium risk. Yet again, we're going to recommend take a free quote because flood insurance review is highly recommended. We'll talk a little bit more about that when we get into that. AE, AH, VE, these are all FEMA flood zones and required flood insurance for a mortgage if your client's taking one out. Okay, let's talk a little bit about FEMA Risk Rating 2.0. It went into effect October 1st of last year. It's It's been in effect for about 90 days now. Again, the biggest change in FEMA's history, and it's changing from kind of a chart system to pricing each property individually based on things like elevation, distance to water, and replacement costs. Again, nationally, about 75%, or in this rate, 77% are going to see rates go up. Again, in your market, it's about 70%. The new maximum rate, though, is about $12,125 a year. We will not see that in the Boise market, right? These are more for properties that are on the coast that could be completely wiped out by hurricanes or other types of dramatic weather events. We're not going to see that in your market, right? If it's on a flood zone, they call it a special flood hazard, right, which is a flood zone. As I just said, flood insurance is required. Now, this is the important thing. If a seller has FEMA insurance, if they already have FEMA insurance because they took it out, either because they're on a flood zone or they're just wanting to have extra protection because they want peace of mind, it can be assumed and transferred to the buyer at purchase. It's a huge thing. If there's one thing you remember, please take this away. Could be considerable dollar savings for your clients if they assume an existing FEMA insurance policy. Now, the bigger news, or as big of news, is on April 1st of this year, about 90 days away, FEMA now is going to push this system to all renewals, right? So FEMA has millions of policies in effect across the country. In Idaho, we just saw, I think it was 5,600 policies. Everybody's going to be reassessed with this new system, and the prices are going to go into effect. Now, on renewals, they've capped it at 18 to 25% per year. So let's just talk a little bit about that. If the original FEMA pricing is, just for easy sake, $500, and they reassess it now at $750, right? Which is a jump of 50%, you're not going to see all 50% in the first year. You'd only see somewhere between 18 and 25%. So it would go up, whatever 18% is of 500, it'd be, my math is not really good, $90 or something like that. It would go up $90, it would go to $590 in the first year. Now, incrementally, it would go up another 18% the next year and the next year until it meets the new market rate of $750. So they're going to stair step the renewals. And this is something that's really important. And again, in our market of Boise, it's going to be more palatable, even though you'll see prices go up, than some of the properties that we're seeing in our other markets like Miami, where you're going to see astronomical numbers where the deals just won't work anymore. Okay. In your market, if your community, like the city of Boise, is part of the community rating system, the discounts still apply broadly to the community. Okay. And then this is the other thing that's important too. In the old days, everything was based on elevation certificates and getting them and validating them. All of that is becoming obsolete because the government is using elevation as part of their pricing, and it's baked into it. Now, that said, if it could help you to bring down cost of the insurance, then great, use it, but it's not going to be required in the deals that you're doing going forward. Okay. Let's talk a little bit about the insurance options. Okay, so again, our platform offers, and we just showed it, FEMA and then Beyond Floods. Beyond Floods is a product provided by a company called National General Insurance. National General is an A- rated carrier, which is one of the highest that you can be. They're very stable, and they're now owned, National General is now owned by Allstate. It's part of the Allstate family. They were acquired in 2020. So Beyond Floods is a very reputable private insurance company. We really, really like them, and their rates are very, very competitive, as we saw from the quote. Now, what types of quotes can you take? So let's just talk about this really quickly, and we've worked very hard with IMLS on this and the team over there, Barb, Glenn, Chris, Nicole. So Any single family home or single family home with acreage, you click on our little raindrop, right? And you will get a quote from both FEMA and Beyond Floods, okay? If it's a townhome or a condo or a mobile home, you will get a quote from National General, from FEMA for sure. You might get a quote from Beyond Floods, but I've X'd it out because I want to set expectations that you may or may not get one there. If it's land or build to suit, right, commercial, investment property, agriculture, you've got a lot of different things in Paragon. You will be rerouted directly. We're not able to do quick quotes on those things. We need more information. You will be rerouted directly to reach out to Erica at We Insure. She'll be happy to answer your question and do a manual quote for you, okay? We Insure will be happy to service you on that at your convenience. Just fill out that form that I showed you and they'll be happy to do it. Okay, let's talk a little bit about the differences between FEMA and Beyond Floods, just so that you're aware of it, okay? So FEMA, the government actually is the insurance provider on the left-hand column there. Beyond Floods, I mentioned it, it's National General, that's backed by Allstate. So either way, you're looking at very reputable, A-quality insurance, okay? The flood risk and the pricing system now is identical. It used to be different, but now it's identical. It's based on the individual property. Now, that said, the government views it slightly differently with their model and the way they price it versus what Beyond Floods does. So you can take quotes, right? It may be an X property, and you're going to see pricing differentiation between the private side and the government side. And so it's really important that you investigate it further because the pricing may vary from property to property. The example that I gave was pretty much in the same area. It was only off a few dollars each month, but in properties that have higher risk, right, or perceived higher risk, you're going to see a great variation on that. Okay, flood insurance limits. This is probably the biggest difference between the government and Beyond Floods. The government, as I mentioned, standard 250, 100. That's what you're going to get. Even though they made a change to the pricing, they did not change the flood insurance limits. They feel that's sufficient. On Beyond Floods, and this is really important for your market because your market's super hot. It's one of the hottest markets in the country, if not the hottest market. And the property values are growing and growing and growing each and every day. Beyond Floods can insure up to 1.5 million in property value, right? So they can go way up to some of these really nice properties, these new build to suits, what have you. The building coverage for personal property then is 50% of whatever the building value is. So Beyond Floods has a lot more flexibility to price for the market that you have and the higher priced properties. Regarding deductibles, again, the government's kind of one size fits all. It's $1,250 individually for the building and for personal property. That's their system. They stay with it. You have a lot more variations on deductibles with Beyond Floods. They'll go from $1,000 to $10,000. So you can buy down the cost of the insurance, the higher that you have your deductible. Regarding flood insurance options, the government really doesn't have any. They have limited options. Beyond Floods, the private side, they'll cover buildings on the property. So, if something's got acreage and it's got a barn, they'll cover that, or a detached garage, things like that, or loss of use. There are all sorts of flexibilities on the Beyond Floods side. From a timing perspective, if you take a government policy, you have to wait the usual 30-day waiting period. Beyond Floods is just 5 days. For both of them, if you have a closing and the lender requires it, those dates are waived. And then, kind of rule of thumb, the government used to be the place to go for anything at the highest risk because they used to subsidize properties. That's not so much the case anymore. In the last 90 days, with their new risk rating, you're basically paying, rates that are going rates for flood insurance. And so, what we're saying is take the free quotes, right? Take the free quotes. put them side by side, the government and Beyond Floods, and make the call to Erica if you need more information or you need to get specific pricing. But again, the government's still going to probably subsidize a little bit in those, really hard to price. But Beyond Floods is a very competitive price, and it's definitely worth looking at. Okay, let's get into coverages and claims, and then we'll get into resources and then take your questions. So building coverage, it's really the physical structure, right? It's the things that are permanent in the structure. It includes things like carpeting, flooring, paneling, things like that. Things like detached garages, I mentioned this before, other buildings, those need additional coverages through private means. Debris removal is also covered in building coverage. Contents, I like to say you can turn a building upside down and shake it, the stuff that falls out, those are the contents. So it's the personal belongings. It's things that are removable, like curtains. They even consider portable air conditioners or microwaves, things like that. Washers and dryers, anything that you can take out easily are things that are contents, right? What is not covered, right, are things that are, damage caused by moisture or mildew, things that are pre-existing conditions. Currency, precious metals, valuable papers, things that might be, artifacts and things like that. Those things are not covered. Property and belongings outside of an insured building, things like trees, plants, septic tanks, patios, swimming pools, those are not covered. And then things like financial losses due to business interruption, unless you get loss of use coverage, you are not covered by a flood. And landscape and exterior features are not covered either. In the event of a claim, right, there's two different ways of how things are repaid, right? So one is replacement cost cash value. The other is actual cash value. So replacement cost value, right, which is the cost to repair or replace an insured property. It's your primary residence, both for the building and the contents, and it's covered through their replacement cost, right? So you bought something and it was, as I showed you there, the property value, I think was, call it 340. I think that the replacement cost was 272. That would be, if that whole property was wiped away, the policyholder would get $272,000 to replace that building, right? That's what it would cost to replace the building. Actual cash value takes into account depreciation. So it's more of things like the contents within a property, right? So let's say you get flooded in a basement there, and you've got a TV room, and you've got things like that. You outfitted it, 5 years ago, and it cost, say, $5,000. They would take the depreciation on that and then give you the actual cash value. So maybe the depreciation's, actually worth, the 10%. So now you're going to get, $4,500 instead of full $5,000 for that. So that's what actual cash value is. Okay, let's turn towards resources real quick, and then we'll take your questions. So located on the IMLS, you have the resource page that Edna's going to make available following up from here. It's a one-stop shop with all of the resources that we offer to your MLS, and it's a good jumping off point for any questions or research that you're doing. Separately, and probably of great value, and Edna's also going to, if she hasn't already put it in the chat, our ebook is really great. It basically summarizes everything I just walked through in a digital form. It's about 8 digital pages. It's great to forward on to your clients. It's in Spanish as well, in the event you have Spanish-speaking clients. It's really terrific, and it's a great resource and easy to kind of flip through and take a look at it. Also embedded in all of this are links to everything from FEMA to We Insure to Beyond Floods. And then I'll put a plug in for my flood status. In the event you get into a situation where the flood insurance is super expensive and you need to get a full flood zone report on that, My Flood Status offers that for $30. It's well worth the investment because many times they create a report that then can be used to really mitigate and get your insurance rates down. So myfloodstatus.com is great. If you have any technical or educational questions, feel free to reach us at info@cartofront.com. Edna will be happy to answer those questions and be a resource to you. And then our flood insurance expert, as you saw before, is Erica Ostrander, and feel free to reach out to her at any time at We Insure. So thank you for joining us today. I'm going to take us off the PowerPoint and be able to see everybody. Let's start with questions. You can unmute yourself. Edna's going to read any questions that may have come through the chat, and then we'll open it up from there.
Thank you, Jason. We did have two questions. Looking for the first one, it says, the chart we can see in CartoFront for the flood zones. So I already mentioned that we are going to share our ebook that does explain that. It does have it's a good resource with the charts on there. And then the second question we have is, it says NFIP flood zone, meaning X as in most safe, flood zone as in what does that mean? And then flood zone B, or did you say B as in boy, both require flood insurance? The person who did ask this question did have to leave the call, so if you want to address it.
Yeah, so let me touch on a couple of things. So first of all, our tech leader, Henry McDonald, is going to be adding a reference on our application right there. So when you see what flood zone it is, you'll be able to hover over and see what X means versus A or V or whatever, right? So we're going to make all the education right within the application so you can see it all. That was a request we got early on this week from one of your fellow members, and it was passed along to us by IMLS. So we're going to add that in the coming days here. To the question again, if it's X, again, it's low to medium risk. I'm air quoting that because that's what has been historical. It doesn't mean that it's not at risk, and the pricing might be all over the place based on the new rates. That said, again, A as in Albert or V as in Victor, you must get flood insurance if you're going to finance that property. Again, if someone pays cash for it, it's up to them, but it's highly recommended to look at insurance anyway, regardless of what the perceived zone is or the perceived risk is.
Hi, Jason. This is Russ Borgman. I have a couple
Russ.
questions. Hi. I have a couple questions for you. Does this work on only active listings, or can I go back on sold listings to look it up?
It's only active listings at the moment. So thank you for asking that question.
Then that explains my question number two.
So tell me a little bit more about what you're looking for, because this is another thing, and Chris is on the phone right now, because we've had some internal discussions about things like pocket listings or before someone puts something up, or historical views of things. So tell us a little bit about what your needs are, and then we can work backwards, because we can quote anything. It's just making it available and how we make it available.
Sure, not a problem. What I was just testing it out. And so I went back to a couple of my old addresses that I used to live in. And then I went straight to Erica Ostrander's page without giving me any. The screen would be up for about 3 seconds and then just click over to Erica.
Yeah, and that's by design. So there's two things. If you really want to know right now, reach out to Erica and she'll be happy to quote you, do whatever you need to, just so you understand. Chris, we'll be doing a kind of a huddle with the IMLS team in the coming week here. So we'll put this on the agenda to talk a little bit. We specifically wanted to launch in the market knowing that we wanted to quote things that we were confident about and do it quickly and professionally and accurately. and we ruled out properties that we would basically, confuse you and bust our system. So we'll go back to this and review this. I mean, probably of highest priority is, so much is happening. You build, there's so much is going on outside of the MLS now, because the second property comes available, everyone's rushing for it. And so we want to address that issue, right? Which is essentially put any address in and get a quote, because before you even take a listing or before you even hustle and try to get a buyer, to do, and we also, but we know how competitive it is to win a listing right now, to buy one. So people are doing things like waiving inspections and stuff like that. You guys need to know for your clients what the risk is, because this is not it's a one-time transaction, but it's, they're taking on risk that could be, multi-years, right? And again, it's total cost of ownership, right? So we want to make sure you've got what you need. So that's a long answer to your short question, Russ.
All right, I appreciate that. I do have another question. So what about listings that are under construction? Will those show up?
So the short answer is you might get them in our system, but I would refer you back to Erica, because here's the thing. Our system's based on properties that are already built, where there's a value associated with it, and everything's baked in, so that we take the data and we send it to the insurance companies and they bring it back. If something's in a build-to-suit or under construction, it's not 100% reliable that we're going to get a quote back. And we don't know all of the factors that are necessary as to what that perceived price is going to be, right? You can say it's going to be $500,000, but what's the actual true value of that? And so, a quick quote might come back, yet, I mean, I would say to really fully vet it out, ask for a professional to get you, to ask a couple more questions and get you an accurate quote.
Thank you. I appreciated the class today.
Thank you. Other questions from everybody who's on here? Okay.
So most of the people in Garden City have to acquire some new insurance. And the properties along the Boise River, the commercial properties in
So ask your question. Do they all need to get insurance? Is that your question?
Right. Are they going to have to, make sure that, because there's a lot of commercial buildings down in Boise on the river.
Right. Let me, I'm trying to think where that flood map is. Hang on one second. Can I, give me 1 second here, everybody. Let me pull up something as we talk here. And I'm going to go to something live, which is the flood maps as we know it. Hang on 1 second. Here we go. Here. This is Ada County's. Okay, let me pull my, let me show this to everybody here. Okay, because it's coming up. Okay, great question. And I think, and this actually is probably important for me to put into the next trainings. Yeah, can everybody see this?
Mm-hmm.
Okay, so in the flood maps get updated on a, kind of every couple of year basis, right? So this is FEMA's work. They spend millions of dollars around the country updating their flood maps. And what they do is, this was updated in 2020. So we're coming up on 2 years, right? they'll do the work, and then they'll have public meetings, and then they'll basically, put it into action. So here is your broader topography, right? And then as I zoom in, right? And here's Garden City, right? Can you see? It's kind of faint, but Garden City's up here, right? And then you get into Boise proper, right? You can see how they're color coding this, right? And you can see, right? To your point, Shanita, this is, anywhere in here. And again, I'm not sure exactly how they designate it, because we haven't layered in what's, what they're determining A, V, X, or whatever. But my guess is, if you're in these properties, they're viewing this as high risk and flood, right? Now, can I say that building X versus, bad example, can I say that building 1 versus building 2 needs insurance for sure? I can't say that from this map.
Right.
But I would say, again, and we've seen it community to community, it won't take much, right? If I'm gonna use Reno as an example. If Reno got 200 inches of snow in December or whatever, it's outrageous what they've got it. I can guarantee you there'll be massive flooding in that area come spring, because you're going to have, we've seen it. You have one 60-degree day, and then that water all starts coming down off the mountain. It's got to go somewhere, right? So same thing here. I mean, I'd even go upstream a bit here. Look at up into this area here, right? So I can't say for certain, but again, this is why we're doing the work with you, is, go in and quote. Again, Erica can do commercial, but she's got to do it. She's got to do it personally. She can't do it.
Okay.
We don't do a quick quote on commercial. We're just doing residential right now. So, but go ahead and again, rule of thumb right now, it's looking like if you're by those rivers, you're going to want to get protection, even if you're on an X zone, right?
Thank you.
Thank you.
Jason, I do have another question.
Sure.
So you had mentioned the elevation and just going across the board. So with FEMA, so does that mean now that some of those subdivisions that were built by the river, where the developer brought in 3 feet of fill dirt and lifted the whole thing up, that's not going to count anymore?
I don't want to interpret FEMA, but what I will share with you is this, right? So up until October 1st, there were 2 different systems, right? So FEMA had a system that was based on all these zones that I just showed you, right? These flood maps. And if they determine, right, Russ, you and I could live across the street. You and I could be next to each other in the flood, in the same subdivision. And that map might have cut between us, and you might have been in V for Victor and been on a flood zone. And I might have been on the other side and been on an X zone. And because of the way they charted it, I'd have X pricing, which standard was 600, and you'd have 1,200. So you had 2 different systems, because all along the private side's been basically saying, hey, we're going to stand by our risk. So we're going to use all the data we can to price the risk of that property. And so you and I would have been next to each other, and they would have priced us pretty similarly, because the properties would have been next to each other, and the basic tenets of the pricing of the property, the elevation, that's those 3 feet, how close it was to the river, all would have been about the same. So your pricing would have been 800, mine would have been 805, whatever, okay? The government's new pricing is basically using the private model in their interpretation of it, the way they see it. And so elevation's now baked into it, flood zones baked into it, all these other factors baked into it. So they're coming up with their own price. Now, their price might be slightly better or less than what the private side's saying. But in that same scenario, If the private would have priced those two properties at 805 and 800, the government right now is going to come in somewhere plus or minus probably $50 of that. So that 3 feet and how they perceive it using the data and that topography is already baked into it, and they've got it assumed now. So that's the methodology. I don't know, again, I'm not one of their data scientists, and I don't want to, represent them, but FEMA now is modernizing how they view things. And that's why their pricing is now more reflective of the actual risk of each property.
Thank you.
Yeah. So again, back to it, so for years, they've and again, this is less about Boise and more about like, Miami Beach, right? So the only way people could afford Miami Beach is if they paid FEMA's reduced subsidized rates, right? But that said, people in X zones were paying $600, didn't have to pay $600, right? I mean, I just took X zone and it was whatever it was, $35, $40 a month, which, is less than 600. So those people that are going to see down, right? They're going to see a savings of $5 or $10 a month for the course of the year. Those people in Miami Beach, though, they got to pay now. I mean, we're seeing numbers in Miami like I quoted one where the property value was $350. The flood insurance itself was like $10,000. I mean, the property's worth nothing. I mean, we all know that's like a starter home or, a smaller home for somebody. There's no way someone can afford that property with that kind of flood insurance. I mean, it's outrageous. I mean, and on top of it, in that market, which I don't think we have in this market, is they can't get homeowners for any reasonable rates either. So anyway, enough about Miami. So we've got a couple more minutes. Any other questions? Any other thoughts? One other thing to offer too is, if you have friends or colleagues, if we would love to have you turn them onto the training. The other thing too is if you can give us your Instagram handles and your marketing information, we'll be happy to follow you and promote you and cross promote, right? Love to do that with you as well. So please, feel free to let us know that. Edna's going to follow up with an email, at the conclusion here today. Okay. Thank you for joining us today. Really, really appreciate it. And again, info@cartofront.com. Any suggestions, thoughts, ways that we can help you, let us know.